The fourth year of the bull market begins just as the third ends, with skepticism, with disbelief, and contempt for the bulls. Of course, that's been the hallmark of the entire run, hasn't it? The conventional wisdom says that the true believers are either frauds or mountebanks or morons. People who embarrass themselves every time they do some buying into the dips. Never mind that buying the dips has made investors a lot of money over this run, and so many others in the last 45 years. Now, if you bought my new book, How to Make Money in Any Market, you know that I think contempt is a two-way street. And the real losers in this market are the skeptics who keep missing these phenomenal moves. By the way, that includes today, where the Dow gained 238 points, the S&P advanced 0.533%, NASDAQ climbed 0.52%. Why is that? Why does it mean that you missed something? Because, look, this morning, the market at around 6 a.m., it seemed like it was going to be down 1% from the get-go because of worries about bad loans at banks. But by the time we opened, we heard from a series of banks that were doing fine. And we got a spectacular quarter from American Express. That fueled still one more rally as the anticipated decline predicated on bad bank loans didn't surface. Why do the bears keep being betrayed by the market? I think it's because the pessimists and their buddies in the media tend to lose track of what they're investing in. Not the S&P 500, the index itself, but the companies in it. If you only put your money in index funds, it's hard to see. But once you get your hands dirty with individual stocks, you find that those companies are simply doing way too well to justify such a high level of negativity as you hear about and read about in making money. Which brings me to the game plan for the next week. Chock full of earnings reports that I believe will be much better than expected. On Monday, we hear from Cleveland Cliffs, and we need this steelmaker to tell us if the real economy is still holding up. This may be one that is a little too weak. Remember, there are three economies: the data center economy, the speculative economy, where I see lots of insider selling coming, and the real economy, which is heavily dependent on the Fed cutting rates. Let's see what Cliffs has to say.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.